Good morning. You're watching Bloomberg Quint. This is First Word.
Curated and presented by Bloomberg Quint's senior-most editors. Weekdays at 8 a.m.
Good morning. You're watching DayBreak on Bloomberg Quint Live, and thanks so much for tuning in. I'm Alex Matthew. First, let's look at the headlines this morning. Asian stocks trade mixed after the US markets posted losses on Friday, led by declines in technology stocks. US Treasury Secretary Steven Mnuchin may visit China in a move that could help diffuse rising trade tensions between the world's two largest economies. HDFC Bank posts its highest ever quarterly profit in Q4. Asset quality remains stable. And a drop in tenancy is expected to have hurt Bharti Infratel in the fourth quarter. It reports earnings today. Any commentary on stake in Indus Towers will also be key. Let's turn to the international markets, and let me remind you what happened on Friday. In fact, Wall Street's three major averages declined on Friday as investors worried about a jump in US bond yields. Technology stocks led declines on reports about an expected decline in smartphone demand and also in the run-up to earnings. Abigail Doolittle of Bloomberg News sums up Friday's Wall Street action in this report.
Stocks finished decidedly lower in Friday's Wall Street session, down for a second day in a row were the Dow, the S&P 500, and the Nasdaq. Now the Dow and the S&P 500 shed about 0.8%. The tech-heavy Nasdaq falling more, down 1.3%. Probably does not come as a surprise then that the tech sector was once again one of the worst sectors, especially for the S&P 500 and the Nasdaq. And as a 50% weighting to the Nasdaq, it helps to explain why that index's slide was bigger than that of both the Dow and the S&P 500. Now, behind the tech weakness, once again, Apple. Apple down 3 days in a row, the worst 3-day slide since April of 2016 on continued concerns around the upcoming March quarter report, plus guidance for the June quarter. Lots of chatter among analysts and also chip companies that there could be some weakness there as it pertains to the iPhone. Now, those jitters are weighing on some of the other big tech companies, Microsoft, Cisco, Intel, Facebook, all reporting next week. Those shares decline, perhaps in sympathy, investors nervous about what could be ahead. Now, the chip sector also sharply lower in sympathy with Apple. The SOX, the Philadelphia Semiconductor Index, down more than 4% on the week. And of course, there was that report out of Taiwan Semiconductor earlier this week where they lowered the guidance for the second quarter, and some analysts are saying that has to do with the iPhone weakness. So not surprisingly, the chip sector really quite weak. And on the day, several Apple suppliers, not only Taiwan Semiconductor trading lower, but others such as Qualcomm and Broadcom. Now, one bright spot on the day, though, GE shares popped higher for the best day since 2015 after the industrials company did put up a better than expected quarter, beating earnings estimates, adjusted earnings estimates by 33 cents. They also maintained the full year profit outlook. On this, the shares did pop higher. And while Haven Bonds did not confirm the stock sell-off, considering that they were also lower for a fourth day in a row, the Bloomberg Dollar Index, higher for a fourth day in a row, may suggest that some investors, while we have this volatility for stocks, are moving toward the sidelines. In New York, Abigail Doolittle, Bloomberg News.
Well, there you have it. It's all about earnings, and in fact, the trade worries, or the trade pact worries that dominated headlines just a short while back, not making a feature. But we're speaking about that right now. US Treasury Secretary Steven Mnuchin says he's considering a trip to China in an effort to diffuse the trade spat between the two countries. The hint of a truce comes as the IMF warns that an escalation in the tension could derail global growth. Jody Schneider of Bloomberg News has this report.
The IMF coming out and saying that this is a risk, these trade tensions are a risk to global growth. That is not something that the Treasury Secretary wants to hear. And so I think this is part of this trying to ratchet down tension. So we don't know if a meeting will occur. A date has not been set. But the Treasury Secretary also met with the head of China's central bank over the IMF meetings. They said they did not talk about trade, yet they did talk about central bank issues and some other related related issues such as China opening up its markets. So I think the U.S. is deciding that on the side of economic growth, they should at least be appearing to diffuse the trade tensions. And, they have been ratcheting up. The U.S. started with the trade and with the tariffs on steel and aluminum, then said it would impose as much as $150 billion on China's products imports specifically because of what they view as violations of intellectual trade rights in the U.S. Then China said it would retaliate. Then the U.S. said last week that it would look at using a 1977 law to further inhibit Chinese investment in the U.S. over those intellectual property rights. So it's been ratcheting up, and now I think this is the U.S. Treasury Secretary's at least opportunity and chance and perhaps hope to ratchet them down somewhat.
All right, that's the word coming in on those trade negotiations between the U.S. and China. Now, we spoke about the U.S. markets and how they ended. Let's also take a look at the Asian markets. They opened mixed because you had 2 out of the 3 early risers open lower, with the Nikkei as of now down about 0.2%, but the Chinese benchmarks and the Hang Seng have also opened marginally negative. So we're setting out for an overarching broad-based theme of negativity at the start of trade in Asia. But let's have a look at what we can expect with regard to trade in India. Jayesh Khilani and Agam Vakil are here to set you up for the day's trade and also to tell you what's happening in the futures and options space. Jayesh, morning. First to you. How's it looking?
Morning, Alex. Looking a little weak as far as the Indian market opening is concerned, but this is largely in line with what the global markets also did on Friday and what you were mentioning about the Asian markets having opened a little lower. So if you look at the SGX Nifty, that is actually trading with a cut of more than 50 points and indicating a start which will be close to 10,550 for the Nifty. Now, if you look at some of the ADRs that we got from the US market, this was largely mixed, but more of losers than gainers, which was largely led by ICICI Bank. That stock ADR was down more than 3%, and you had Tata Motors and Vedanta, which also declined more than 1% each, with Dr. Reddy's also ending in the negative. What actually did well was Infosys, which climbed more than 1%, and we had HDFC Bank and Wipro, which also managed to close positive for themselves. If you have a look at the commodity space, no major cues coming in from the entire commodities basket. If you have a look at crude, that is largely trading with a cut of about 0.3 to 0.4%, just above the 68 per barrel mark for WTI, and Brent trading just below the 74 mark for itself. Now, if you look at the base metal space, the last week was largely dominated by base metals, but if you have a look at Friday's close, we had a mixed closing for all of the base metals. So we had the likes of aluminum and nickel, which declined in trade, while we had lead and tin, which gained more than 1% each. As far as gold prices are concerned, we have seen largely trade range-bound trade for gold, but a little bit on the softer side, mostly on account of the dollar index, which actually managed to surge for the 5th or 6th day in a row. Now, if you have a look at some of the cues that we got for the domestic market in terms of the fund flows that we had, so no major numbers coming in, as compared to last week that we had got. So the FIIs actually sold more than 20 crores, while the DIIs actually pumped in more than 100 crores. Now, if you look at the month-to-date picture, the domestic institutions have actually pumped in more than 5,500 crores, while the FIIs have withdrawn close to 4,000 crores worth of equity. Let's have a look at some of the key indices that we had. So Friday's trade was largely, downtick was led by the Nifty Bank and the banking space on the whole. So we had the Nifty Bank Index, which actually closed 0.7% in the red, followed by Nifty Mid Cap, which also declined 0.5%, and the Small Cap Index closed flat for itself. Now, in terms of the sector gainers and losers that we got, so primarily there was one sector which actually gained, which was the Nifty IT, or largely on account of TCS, which also neared the $100 billion mark in market capitalization. So that ended about 5% higher, the index itself. As far as the losers are concerned, like I was telling you, the banking space actually dragged the Nifty lower. So we had the Nifty PSU Bank Index, which declined 2.5%, and we had the Nifty Energy Index, which also declined more than 1% for itself. As far as the VIX is concerned, volatility actually cooled off in the market and declined as much as 6%. So we'll have to wait and watch, especially going into expiry this week. What led to the flat closing for Nifty? So we had TCS, Infosys, the IT pack that actually gained, followed by HCL Tech. And as far as the losers are concerned, we had Reliance, ICICI Bank, HDFC, and L&T, which declined in trade. But Agam, what can we expect from the expiry week?
Sure. So, Jayesh, what we've seen is the Nifty hanging on, consolidating, as we have indicated throughout last week, and that trend continues. And I'm not really sure if what sort of an impact can the global cues have for now, at least as far as the opening is concerned. We're looking at a negative opening, but when it comes to changes in open interest, absolutely nothing as far as the Nifty futures go. Coming down to the Nifty bank futures, once again, very little change there. The India Volatility Index, as well as one might expect, has fallen even further, now below the mark of 13, and no change in the Nifty put call ratio, now at around 1.61. In terms of changes in open interest across several of your options, as one might expect, we're looking at more unwinding in the 10,200 and the 10,300 puts. Moving in terms of futures, a lot of activity with respect to the ban. So Dian Housing Finance enters into the F&O ban. On the other hand, we have RB Infra moving out, and two stocks that I'm watching out for. First one is Mindtree, of course, moving up along with several other IT counters. And on the losing end, I'm looking at weakness in Canara Bank, which also lost out along with several of its PSU banking counters. So these are some of the stocks we're watching out for. But we'll have to wait and watch as to what role earnings play in moving the benchmark indices and as well the global indices, and what that can bring about for our own markets today.
Absolutely, Agam. Heavyweight HDFC Bank, in fact, reported numbers. We'll come to that in just a short while. Before we do, let's take a check on the rupee and the bond market. The Indian rupee on Friday weakened past the 66 mark to hit an over 13-month low against the dollar. And in the bond market, the yield on the 10-year benchmark climbed further on Friday, this time by 6 basis points. The most recent rise, in fact, in bond yields is on account of the minutes of the last Monetary Policy Committee meeting. 2 of the 6 members voted in favor of a rate hike. The tone was contrary to what many thought was a dovish policy at the start of the month. The yield on the 10-year benchmark has now risen nearly 55 basis points over the past 2 weeks to hit an over 2-year high. All right, let's shift focus now to the commodities space, and Jayesh Kalani is back with all the details. Jayesh, over to you.
So Alex, like I was mentioning, no major cues coming in from the entire commodities basket. If you have a look at the oil markets, that is currently trading about 0.4% in the negative, but still below the 69 per barrel mark for WTI. Now, this is despite the fact that US rig count has actually climbed to a 3-year high. So for last week, US actually added about 5 rigs and made the total count of 820. Now one would have expected large moves for oil prices, given we had the US president which actually slammed the OPEC for inflationary oil prices. So we'll have to wait and watch how the market actually reacts to that. But as far as the base metal space is concerned, we saw some big moves come about for last week. The index itself climbed for the 4th consecutive week. In fact, it surged more than 4% during last week. Now, the top gainers over there were aluminum and nickel, which surged on account of the disruption in the global supply demand scenario that we have witnessed on account of the sanctions. So we had nickel, which posted its biggest weekly gain since the month of Feb, and actually ended about 1.6% lower on Friday, and was also the top loser in trade. Copper, on the other hand, that gained more than 2.5% last week, and that was the biggest jump that it saw for itself in the last 2 months. Now, as far as Friday gainers were concerned, we had lead and tin, which gained more than 1% higher. And if you look at the Shanghai Futures Exchange, most of these base metals have started on a positive note, except for aluminium, which was trading about 0.8% in the negative. As far as the precious metal space is concerned, gold has largely stabilized near the 1330, 1335 mark. Also, on account of the dollar index, which has actually gained for the 5th straight day.
All right, thanks so much for that, Jayesh. Now, we've given you a check of all the markets so far. Let's turn to earnings now. It was yet another steady quarter for HDFC Bank, but though it continued with its 20% profit growth, its loan book growth was at a 5-quarter low. Shraddha Babla is here with some of the key takeaways from the quarter gone by. Shraddha?
Well, yes, so HDFC Bank's fourth quarter numbers that it reported was broadly in line with expectations, with all the core earnings metrics remaining steady, with the net profit growth coming in at 20.3% for the quarter. Now, this is the fourth consecutive quarter where profit growth has remained above that 20% mark. When you talk about the operational performance, operational profit grew by about 21%. That was led by two factors. One, the fee income growth was robust at about 30+%, owing to a seasonally strong quarter. And on the other hand, you also had slower OPEX growth, which aided that operating profit growth. Cost to income ratio came in at a multi-quarter low of 40.6% on account of the bank's digital initiative. So good operating profit performance. The bank also mentioned that they have not used RBI's dispensation to spread MTM losses on bonds during the quarter. The only marginal disappointment during the quarter, or the surprise, was the loan growth number, which slipped to a 5-quarter low of 18.7% and dipped below that 20% sort of a mark that they've been seeing for many quarters except for demonetization. So it was the weaker performance in the wholesale book, which grew by just a single-digit number of 9.5%, that dragged the overall loan growth lower. Because on the other hand, the retail portfolio continued to do very well, growing at about 27%, mainly led by a faster growth in unsecured lending segments like personal cards and credit card loans. When it comes to the asset quality, the headline gross NPA number remains steady, unchanged at 1.30% versus 1.29% on a sequential basis. In absolute terms, the gross NPA number rose by just about 4% also. So overall, the asset quality was well contained despite RBI's February circular. So overall, a good set of numbers in line with estimates. No surprises as far as HDFC Bank is concerned.
As always, Shraddha. Well, let's move on to the earnings that are to be reported today. Tower major Bharti Infratel will be reporting its fourth quarter earnings, and it is likely to be a muted quarter. Somit Zakar is here with what the street is expecting from the company. Somit, morning.
Good morning, Alex. So if you see, the consolidation in the telecom service provider space will yet again impact the tower company, that is Bharti Infratel. Now, like what happened in the third quarter of financial year 2018, the fourth quarter will also see tenancy exit from Bharti Infratel because of the shutdown of Reliance Communication, Aircel and Tata Teleservices. In fact, the fourth quarter results will also see the full impact of tenancy losses that the company had seen in the third quarter. Now, in the third quarter, the company had lost around 8,562 tenants on an absolute basis, but of them close to 5,600 continued to pay. So that full impact will be seen in the fourth quarter of financial year 2018. Now, on a consolidated basis, compared to last quarter, the headline numbers are expected to fall. Now, revenue is expected to fall by around 2% to 3,595 crore rupees, while EBITDA is expected to be down by around 4% to 1,550 crore rupees. Margins are also expected to contract to around 43%, but on the flip side, net profit is expected to rise by around 5% to 616 crore rupees. Now, this is because of higher other income and because of net interest income. Now, on a quarter-on-quarter basis, revenue is expected to fall for the first time in the last 12 quarters, while EBITDA margin is expected to be at a 9-quarter low. Now, key things to watch out would include management commentary on further tenancy impact, update on inorganic opportunity like the acquisition of Idea and Vodafone's stake in Indus, and outlook on tenancy growth in context of Reliance Jio will be a key thing to watch out for.
All right. Thanks so much for that, Somit. Let's move on now. Shraddha is back to tell you all about the stocks in news. Shraddha, what are the stocks on your list today?
Alex, some other earnings which were reported after Friday market hours. So first off, Indiabulls Housing Finance, which is also a nifty company. So a good set of numbers coming in broadly in line with expectations, though. Net interest income grew by 22%. Net profit growth also came in at about 22.6%, 2,030 crores, broadly in line with Bloomberg estimates. Provisions rose to about 326 crores versus 266 crores on a quarter-on-quarter basis, whereas the gross NPA number was unchanged at 0.77%. AUM growth came in at about 34%, in line with the 30+% trend that we've been seeing for the housing finance company for multi-quarters now. So in line, a good in-line set of numbers. You also have CDSL, which reported numbers. Again, steady growth there as well. Revenues grew by a strong 35%. On the other hand, net profit growth came in at a slower lower 10%, and that was mainly on account of a higher tax outgo, because EBITDA grew 54%, sorry, and EBITDA margins also saw a significant uptick. So good set of numbers from CDSL. Bottom line weighed by higher tax outgo. Sasken Technologies, again a mid-cap IT company, on a sequential basis, it's a good quarter, in line with what some of the other mid-cap IT companies have shown. So while revenues dipped by about 2.5%, net profit grew by a strong 27%. EBITDA also grew by 31% with a margin expansion as well. So you could probably see some positive reaction there. That apart, also a couple of updates on some of the pharma names. Cipla is one company where the company's Pithampur plant has received 3 observations from the US FDA. On the other hand, you have Unichem Labs, where the US FDA conducted inspection at its Ghaziabad facility, and the company has said that there were 0 expectations at the end of that inspection. So that's a positive development for the company. India Hume Pipe Company, you could see a positive reaction on the back of order wins of about 580 crores. And lastly, you have Kitex Garments, where the board has said that they will meet on 25th April to consider proposal for further investment. So we will continue tracking that stock as well, Alex.
All right, Shraddha. Clearly, earnings is front and center today. Somit Sarkar is back now to tell you all about the big brokerage calls of the day. Somit, I believe you have 2 to tell us about.
Yeah, Alex. So the first one is Kotak Securities on Dilip Bilkon. Now, they have initiated coverage on the stock with a buy rating and a target price of 1,365. Now, according to the brokerage, Dilip Bilkon is well placed to leverage the significant growth opportunity in the road construction space and diversification into other EPC segment. Now, it says that Bharatmala will offer EPC opportunity worth 3.3 trillion over the next few years, and because of that, it is expecting the company's order inflow to grow at a compounded annual growth rate of 8% over FY18 to FY22. Now, the brokerage is also expecting the company's market share in NHI ordering to expand to around 17% by FY22 versus 15% in FY18. Now, the brokerage is expecting the company's revenue, EBITDA and net profit to grow at a compounded annual growth rate of 26%, 27% and 28% over FY18 to FY22 on the back of strong growth in ordering, steady margins, financial deleveraging and normalization in the tax rate. Lastly, it says that the Biltcon compared to peer average is currently trading at a lower valuation multiple. Second, we have a CLS on Ashok Leyland. Now, the brokerage has maintained its buy rating on the stock but has raised the target price to 185 from 145. Now, according to the brokerage, Ashok Leyland has been able to defend its market share even when Tata Motors turned aggressive to gain its lost market share. Now, the commercial vehicle cycle has surprised positively, and on the back of that, the brokerage has raised its FY19 industry growth estimates to around 13% from earlier 10%. However, for FY20, it is expecting the growth to be at 10%. Now, adding to that, the brokerage also says that the scrappage policy could further lift the industry growth outlook. Now, the brokerage is expecting the company's EPS to grow at a compounded annual growth rate of 23% over the next 2 years. And lastly, it says that the expensive valuations of Ashok Leyland are justified given the strong earnings growth outlook, improved franchise and potential demand boost from scrappage policy.
Thanks so much for that, Somit. Now, of course, you can tune in over the course of the day to Bloomberg Quint and the website Bloomberg Quint, and you can look at Bloomberg Quint Live, also the social media pages, and you'll find all the live market action and all the updates in the world of corporate news. But there are also a few stories that are already on the website that you can check out, and here are just a couple of them. In a couple of days, Chinese President Xi Jinping will host Prime Minister Narendra Modi in the country's Wuhan province. The 2-day summit meeting that begins on Friday will be an attempt to improve bilateral relations. That's according to China's Foreign Minister Wang Yi. The Delhi High Court has asked the Reserve Bank of India and the Goods and Services Tax Council to respond to a plea that challenges a recent circular that prohibits banks and financial institutions from providing services that relate to virtual currencies. The Securities and Exchange Board of India is considering a forensic examination of the financial statements and disclosures made by ICICI Bank in the last few years. This is with regard to the ongoing investigation into allegations of conflict of interest in a loan that ICICI Bank advanced to the Videocon Group. Well, Earth Day was celebrated across the globe on Sunday, and this year there were clarion calls to end plastic pollution by 2020. A 23-year-old Dutch inventor has found a solution to clean half the plastic garbage in the most polluted patch of the Pacific Ocean in just 5 years. Here's how.
There is about 80 million kilos of plastic floating around, which constitutes to 1.8 trillion pieces of ocean plastic inside the Great Pacific Garbage Patch.
Well, even back home in Maharashtra, the ban of plastic is a good step, but we've clearly got a long way to go. Moving on, Bitcoin seemed to be the flavor of speculators last year with its tearaway rally. But what's the actual value of the cryptocurrency? Let's take a look. Well, in India, the value doesn't really matter because there's a virtual ban on virtual currencies. Well, that's all we have for you on Daybreak, but up next is all you need to know. So do stay tuned. This is Bloomberg Quint.